Shacham from Solidblock. Also, he's besides advisory to Solidblock, he's also a co-chair of Fiverr Israel. Moreover, he will talk to us about real estate tokenization and how this will affect and change the real estate market. We look forward for you, though. Thank you so much.
Kalimera, Athens, how are you? We're going to have a fun talk. Just by raising your hands, I want you to tell me how many of you invested in pension? Not a lot. Nobody invested in pension? No pension for you? Okay. How many of you invested in stocks? Raise your hand, don't be shy. Don't be shy now. Right. And how many of you bought real estate assets? Not bad, not bad. So we have a mixed crowd tonight. If you bought a real estate asset, you will know, like I do, that everybody wants to own a real estate asset because that's one of the ways of building your wealth. Even Robert Kiyosaki talked about it. But the problem is that you need a lot of money. So there's a problem of entering the space of ownership of a real estate asset. This is one of the problems that the tokenization process in real estate, solves. The other one is the asset owner. The asset owner, he wants to build another project. He wants to take another project. He wants to build more. He wants to create more. But he has a problem too. He doesn't have money. No money. So the same answer applies to him. Tokenization of real estate can solve his problem. I'm Shacham. I'm an advisor to Solidblock. I'm co-chair of Fiverr, which is an international organization that tries to implement blockchain technology in real estate, and we'll be talking about tokenization. My friends prior to me has talking to you about tokenization, but in the real estate space, it's a little different. And I'll start with an example. I came here a few days earlier, and I was hired by the Greek government to reconstruct the Parthenon, an ambitious project. Okay? So I came in, I signed the papers, I got a paper. All I have is a piece of paper saying that I can reconstruct the Parthenon. And you know what else? After I reconstruct it, I can take some money. If you want to enter the Parthenon, you'll have to pay a fee. So all I have is a piece of paper and my vision of the new Parthenon for the Greek government. Now, what do I need to start my project? I need to plan, I need to build, I need to have yields, I need to collect money. So I decided that I will start by building a model. See, this is my model. I build it out of Lego pieces. But in the same idea, the tokenization process takes the economic plans for the real estate project, even though it is a BOT, build, operate, and transfer, and takes the attributes and creates coins. And if I were to really get hired by the Greek government, which I'm open for suggestions, then I would create the Parthenon coin, okay? And the people who would buy the Parthenon coin will enjoy a yield of the fractional ownership of their entrance, all the entrances to the Parthenon after it would have been built. So this is a more difficult project, and we will talk about the advantages. So the initial coin offering, when I'm still with the paper, remember me, early me, the visionary will only have a piece of paper. I could still create an STO, I can create an initial coin offering for a security token, and I can tell you, if you give me your money today, then when I finish building the Parthenon, you will get the yield of tomorrow, my friends. So that's great. You'll start asking me, well, what what does this solve? And I'll say, well, it solves my liquidity, because now instead of raising just from certain funds, I can raise money from the private sector, from credited investors. It increases my liquidity. I'll be using smart contracts. We don't always have to use smart contracts. Regular contracts are enforced by the law. But if I want to raise money from people all over the world, then I need to use smart contract in order for it to be enforced by cryptography. It means that when you give me your money and you're living in Korea or wherever you're from, then the money doesn't get fully transferred to me except when I reach a certain milestone in my project. Okay? Not a physical milestone, a planned milestone that is built inside the contract. It could be that also I get some more money to pay vendors, to pay builders, but the transferring of the money does not happen until I finish a certain milestone. Okay? So they can also store information about the project, they can hold records. There's other benefits like that I used with the smart contracts, that decentralizing the trade. It doesn't decentralize the asset, that is true, but I can have a decentralized trade, which is the name of the convention, and we have a 24/7 market opening. There's transparency, public auditing, reduction of direct cost, and increased market depth. Cross-border investments are made easy. And this is a summary, you can look it up later, but the important things you need to look at are that I have an exit plan as an investor. So if the market crashes, I can sell my coin easier than it would be to sell a regular asset, and I have a lower liquidity risk. Then you'll tell me, like this nice gentleman over here, you'll say, well, Ido, that's all theoretical, that's in the future, what's happening now? Has anybody really made a token? And I'll tell you, yes, we did. Not too long ago, we tokenized part of the prestigious St. Regis Aspen Resort. Now, the first speaker said that he doesn't know how to value. There's a problem of pricing in this space. But I'm a real estate appraiser, that's my profession. I know how to value assets. I also know that if an asset is broken down, it doesn't even reach its potential. There's what's called highest best use. So in Aspen, they wanted to reach their highest best use, which was $225 million. But they didn't have enough money. The property was run down. They came to us, they came to the bank said, I'll give you 24 million. I'll give you 94 million. And then they said, but you'll have to put in your own money. So they fractionally sold part of the asset. They tokenized $18 million, and we at Solidblock made the Aspen coin and sold it to credited investors and to funds and to private offices, and that's how the project is now well out. And the funding was effective, it was built-in compliance. Inside the coin, I can build all sorts of compliance, like that I'm not selling the coin to someone under 18, and like that there's anti-money laundering built inside the coin. So when it's being transferred secondhand, whether it's off the counter or in a trade, then you have to pass the bar inside the coin. The coin itself will not be transferred if it has a built-in compliance and regulation system. We used Indiegogo to crowdfund the project. How long will it take? 3 to 6 months to create a coin. How much money does it cost? From $100 to $300K. And from registry, we streamline it, we create a real token, and then it's easy and transferable. You see, this is the entire tokenization process. This is the most critical part of the whole project. The due diligence in the beginning, making sure that the base asset is worth it. That's why a project that is already built on a building with a yield is much easier to tokenize than planned, like the first example of the BOT. I will be accepting questions.